All right, Matt, what's your word of the day? How do you see today shaping up?
So word of the day is climate, and we're going to climate because for one thing, we're based in the St. Louis area, and I'm pretty sure it's like 2 degrees out here right now. So climate's relevant, but I really chose it because the current climate demands a more selective approach with policy change and sticky inflation and broadening at play. Stock picking and sector allocation, it matters more now than it did the beginning of the last couple of years.
With that in mind, I want to get to your pick, Matt. What is your pick first today and why?
So Domino's Pizza is our pick, and kind of the reasoning here is it's been on our radar for a while. It hits the screens, and there's some qualitative things we like. And what triggered this Domino's is that it's on the heels of Buffett's news doubling down on Berkshire's ownership. They're trading at July 21 levels, which is the worst performance since I think for quite a while, but they're up 14% year to date. They've got an attractive relative valuation trading at 26 times forward earnings, which is under their 5-year average. You know, explosive dividend growth. We're always looking for that. It's close to, I think, right around 20% over the past 10 years. But just a handful of things we actually really like here about the company is they're a well-oiled machine. There's superior technology. You can look at their app. They're connected with Uber Eats and later this year, DoorDash. Same store sales growth has been significantly higher than Papa John's and Pizza Hut. And really, their underperformance recently comes from industry-wide headwinds, which has kind of been the story. So stretched consumer, pricing power, et cetera.
Well, Matt, that's really my question for you. Looking at what their last earnings call, by the way, their earnings are coming up next week for people that are interested in investing, but they cited economic challenges when it came to consumer spending and also intense competition in the pizza space where consumers are really looking for value. So right now, as we talk about the stretched and stressed consumer, as our previous guest said, do you think this company is prepared to kind of battle on what looks like, it's not as sexy as the chicken sandwich wars, but the pizza wars, it sounds like?
Yeah, of course. You know, and just personally, I mean, that's probably the pizza place that I would go to select. And going back to the technology, I mean, they're superior. There's quite a bit that Domino's does that kind of under the radar. A lot of their revenue actually isn't directly from pizza sales. It's supply chain. They own the trucks. They predominantly produce their ingredients, and then the franchisee can use them from the supply side of things, and there's a profit share within there. So, you know, just the customer consumer, I feel like Domino's has a dominant position, and of course Warren Buffett feels the same way, so that's always a positive.
I mean, it doesn't hurt when Warren Buffett backs you up. I want to talk to you about the climate in the market. That was your word of the day, climate. Right now, we're seeing, at least year to date, where the S&P equal weight and the S&P, they're trading very close together. It kind of signals a broadening in the market. As we look at that broadening, are there certain areas of the market that you're excited about potentially going forward? And especially after these Fed minutes, where I think it was really a hawkish tone, all FOMC members, not a surprise, but all voting for a pause. So a lot less clarity about when cuts could be coming.
Yeah, there's so much going on here. You know, what's interesting is the equal weight S&P, the RSP ETF is matching the S&P 500 year to date. This time last year, if you looked at it this time last year, the S&P 500 was outperforming the equal weight fivefold. So it was up 5% versus 1%. So we're kind of looking at that situation. And with broadening, I mean, there's a set of new sectors which looks a lot different than the start of 23 and 24 that are leading. You've got financials and materials versus tech-heavy leadership we're used to. So, I mean, again, I've said this many a times, it's going to be a grind this year. There's less obvious leaders, and, don't ignore other parts of the economy. So, and the other part to this, we've seen a quiet shift from growth to value to start the year, and we expect it to continue. It's 2 straight impressive years, primarily due to growth stocks. Market cycle, and it's no different here.
All right, Matt, very quickly, we're almost out of time, but you also like European equities. Do you like playing it on kind of an index basis like the stock 600, or is there certain one of the bourses that you're especially bullish on?
Yeah, we actually, European indexes obviously are on a tear right now, and we like it's Franklin International Core Dividend ETF. DIVI is a symbol, and primarily because we're a dividend growth firm, but they hold a lot of the holdings that we have individually, and there's a lot of household names in there: HSBC, Toyota, Novartis, Nestle, et cetera.